Welcome back. We now have another set of the top brass of TCS. We have with us Milind and Samir, the CHRO and the CFO. Gentlemen, thank you very much. Samir, I'm going to delve straight away into the numbers question. No more big picture. The margins, you said you're confident you'll get to 25%. But is it going to be easy to improve next year, considering that, there are problems of attrition, there are problems of high-cost labor in the US. So what's the scenario next year in terms of margins?
Okay, let's start with Q2.
Yeah.
And delivering 90 basis points from 23.1 to 24, I think is
was
credible.
Better than street expectation, not taking away from it.
And our immediate priority is to exit Q4 at 25. And as you rightly said, there would be a combination of things which would play out in FY24. Both we'll have our usual increments coming in, and we'll have discretionary expenses also coming back, and we'll have to balance that off with either from productivity, either from utilization improvement, realization improvement, and that is something which over the years, if you see, we have been able to manage it, and that's a task on hand, and we are collectively, as I said it last time as well, we are collectively in it to do it.
So, Samir, can you get to 25% without any further benefit from Rupee? Because if the Rupee becomes a tailwind, again, in Q3 and Q4, can you surpass 25%?
So, Rima, inflation, currency, all of it is something which we take it on our P&L.
Not a 3.5% kind of average increase that we've seen.
So, let's take it that way. Currency is not in our hand. We expect it and we built it into our model, but we'll take it as it comes. Even if it goes on a appreciating trajectory, we'll have to build it into our margin. Okay. And our 25 intent is irrespective of where Rupee goes.
No, how much is dollar and non-dollar?
How much is dollar and non-dollar in terms of revenue mix? Yes. So approximately 55 to 57% is dollar, and euro and GBP will be a combination of 25 to 30%.
Yeah, it looks like at least GBP and pound will not punish you as much as it has done.
Let's hope so.
Okay, Milind, I wanted to ask you about attrition. NGS just told us that about 25 to 30% are on-site workers. And the unemployment levels in the US are so low. So would not attrition continue to be an issue and high wage costs because of this element in the developed markets?
Okay. You are talking only about US or in general?
More US.
No, I think our US attrition means obviously has been more than what it has been, but the differentiation of what it has been versus what it is now is less than what we see in other geographies. Okay. So I don't see that as much of a challenge. From a wage standpoint, yes, there is a slight increase in wage in US, but I think that is something which we manage through a proper mix. And because we actually are also getting a significant number of trainees in the US nowadays. So US trainees, workforce coming from locally.
Cost more, no?
Trainees
compared to what they would have cost last year or year before.
Yeah, but the point is, we also basically see differentiation in the pricing. When people move and do different things, we actually expect that to happen. But even that pricing actually from where they start to where actually eventually the market is significantly different.
Milind, I want you to comment on the tech industry, and this is not a TCS specific question.
Yeah.
There are a lot of reports about companies, tech companies, large ones, mid-caps, delaying the onboarding of freshers. There have been instances where the variable pay has been less than, maybe what was promised or what the employees anticipated. What, according to you, is the reason for that? And what is happening?
I can comment about TCS first. Is it okay if I...
Yes,
but then do tell us about what's happening in the tech
all right.
industry.
So I can only speculate like the way you can, but on the other part.
No, you can do it better.
Okay. But I think the point is we actually are, we have, like I said earlier also, we have 100,000 plus trainees last year, 35,000 now, already looking for another 12,000. Honoring all the offers, across the board, not just in India, in the geographies as well. So, we don't see any challenge from that standpoint. Variable pay, no, we actually have been paying 100% until last quarter. This quarter also, 70% of our people will get 100% variable pay. 30% will get based on the business unit performance. That is about TCS. In general, there are industry as a whole basically means different sized companies. Scale is obviously, makes a significant difference for us. If it is a smaller size company, obviously some of those things will be felt. We are able to manage it reasonably well because of our model, because of our culture, efficiencies, and also obviously scale. All of that comes together and make it happen. But the point is, smaller companies definitely can have a bigger challenge on this front, considering today's situation.
What hits the smaller companies now can come to you next year? Is that a likelihood?
I do not see that happening in the near future at all, because I think we have been managing our supply side challenges. What we have seen in the last 2 years and how we have dealt with it, it gives me a lot more confidence of how do we deal with it in the future.
Are you upping your fresher hiring target? It was 40,000. You've done 35 plus 12 in the pipeline would take you to plus 50, 52.
47, 35 plus 12, 47.
47, sir.
47. So, that's the plan right now. The 12 is also in the pipeline, So, we'll decide at the end of Q3 and beginning of Q4 if we need to do more.
So you have upped it, right? From 40 to 47 is a given.
Absolutely.
And at the end of Q3, you will decide whether you want to increase it further.
Increase it more.
For the market outside, the big number is that you're hiring less than you hired last year. That comes as a bit of a shock, in the sense, as a bit of an indication whether you don't have enough work for next year. Samir, any comments?
Sure. So if you look at the last 2 years, in FY21, when we had a flattish revenue growth, we had approximately headcount addition of 10%. Last year, we had 15% growth. We had almost 20%. So we have significantly hired ahead of times and invested into the capabilities or capacity building, and then we have invested incrementally on organic talent development. So I think that is what is now helping us in terms of flexing it as needed.
Samir, can you talk about the pricing of deals, particularly in Europe and UK? Is it under pressure?
So pricing overall remains stable, and there is nothing specific to call out across geographies.
Even in Europe and UK, it's stable?
Yes, absolutely.
So even if clients are getting hit, they're facing inflationary headwinds, etc., they're not asking you for...
So technically, they are investing into technology on various demand drivers which we have consistently called out upon, and on that, on a overall basis, we don't see any impact on deal pricing.
In some geographies, subcontracting will go up.
Subcontracting, we expect it to come down in general. In general, because the fact is some of the visas are basically better. US is still a challenge right now. Other geographies are doing better, so we expect it to come down in the coming quarters.
One question, Milind, based on the math of calculating LTM, the 12-month period, etc., what will LTM attrition look like, exit LTM attrition by Q4 FY23?
See, I think if you look at how the LTM is calculated, and if you look at the numbers, what happened in the last 2 quarters, even if we reduce significantly in the next 2 quarters, the LTM number will not come down in a big way.
20% less.
It will still be around 20%, I would say.
Around 20%.
Okay. Then we have to call it a day, not the least because the markets are about to open and they will pass their verdict on TCS. Thank you very much, Milind and Samir, for joining us.
Thank you, Lata. Thank you,
Rima. Thank you. Thank you.